Douglas Blake, Senior Wealth Manager with Newbridge Securities, joins us live from New York. Douglas, morning. Always a delight to have you back. Douglas, the story for emerging markets is crude. Crude prices are at a 9-month high. Do you think markets like India, or for that matter even the United States of America, can they afford to ignore crude?
Okay, at this point it's a very fragile recovery throughout the world. So it definitely poses a threat to have crude prices at these levels. The playbook here, let's look back to 2008. Last time we had crude prices at levels like these, it did break the back of the economy, but we had the financial crisis in full swing at that time. It was really the first time we had seen those types of crude prices, and particularly seen them at the pump, and it really was a shock to consumers. So it was a very powerful thing. This time around, the markets are a lot more healthy. We're getting a little bit more accustomed to high commodity prices. Vehicles are becoming more energy efficient. Businesses, manufacturing, a little bit more energy efficient. Doesn't have the same shock there. And we have one other thing working in our favor here in the U.S. at least, and that's natural gas, which has absolutely collapsed to near an 11-year low. And that means that energy prices in the home during this very, very mild winter have been much lower. And that puts a little bit more cash in the pocketbook of a consumer here that he can take out and pay at the pump for gasoline.
Douglas, hi, morning. What about news out of Europe? You think that could play party spoiler, considering the EU growth forecast had been downgraded?
Well, I think that's something that we pretty much had baked in the cake at this point. You know, when I came on the show a few months ago in December and talked about this LTRO, the long-term refinancing operation, really being a game changer, I think we've seen exactly that. We've had a tremendous rally here in the U.S. We've had a rally across the globe, what we might as well call the risk-on rally. You've seen it there in India. You've seen it in China. You've even seen it to some extent in the Eurozone. It says that we're starting to make peace with the difficulties in the Eurozone. Let's face it, the U.S. budget is not a pretty picture either, but it doesn't feel like there's a crisis. And we're starting to make peace with that situation in the Eurozone because finally we have an instrument in place that's big enough to really handle the shocks day in, day out of a debt crisis. So going forward, I don't think it poses that kind of a threat in the near term. Longer term, if the Eurozone does not start to pick up the pace, that could certainly have negative implications for the emerging markets, certainly for the U.S. market, and, of course, the Eurozone itself.